Hello everyone. Today we will discussing about the basic introduction portion of foreign exchange market. In this lecture we will discuss what we mean by foreign exchange and who are the various participants as well as the basic features of foreign exchange market. While discussing about the features of foreign exchange market, we can take up the features like about the market, hours of trading, type of currencies, and the various other features that we'll be discussing in this lecture. First of all, I take up about the place where the trading is being done. We can say as what is market? What is foreign exchange market?
That means when we define about the market, we try to say that foreign exchange market is being divided into two parts. And if you try to see the size of the market among the two, then retail market is considered as the largest market, or it is a big as compared to wholesale, because the dealing with bank and customer is much more as compared to dealing between two banks. The size of the market is also very large. If I'm not wrong, in terms of USD, the foreign exchange market size is more than 6 million on daily basis. I'm trying to take the data of USD, reason being USD is the most commonly accepted foreign exchange currency in the foreign exchange market by all the customers who are dealing in the market. When we say all the customers, means customer of any country happily accept the buying and selling of the foreign exchange when it take in terms of USD. And the reason we have already discussed in the last lecture. Earlier, major metropolitan cities, they were considered as the leading foreign exchange market. Mumbai, Delhi, Calcutta, Madras, they were earlier considered as a major leading foreign exchange market. But after the reforms in the 1991, openness to global economies, the trade has increased, and with the increase in trade, the size of the foreign exchange market has also increased in India. And along with these metropolitan, Bengaluru, Surat, Goa, Hyderabad, they also become as a major market for foreign exchange. That means you can say that wherever the port is there, through which export and import could be done, where the international flights are there, they becomes a major market for buying and selling of foreign currency. I'm not saying that foreign currency buying and selling do not take place in the other market where the trade transaction is not there. See, now the volume of foreign tourist is also there. But as you are aware that there is very limited amount is being used while traveling from one country to another. That means the market exists, the market size is not large. But when we talk about the business between the two countries in terms of export and import, then the heavy transaction of foreign exchange used to take place. That is why we have tried to include the these places where mostly international flight or ports are there, seaports are there, through which export and import deal used to take place. So we have seen about we have discussed about the size of the market of foreign exchange. We discussed about the two segments of foreign exchange, and along with that we have also discussed that it is over the counter. Now we discussed about that for how many hours this market is open, because when we say market, it is always said that there should be a number of hours for which the market is supposed to operate. And as just now I have told you about the two segment of the market, bank to bank and bank to customer, in both the segment one thing is common, that is bank. Always keep in mind that foreign exchange buying and selling and settlement will always take place on one side as a bank. That bank is always considered as a major player in buying and selling of foreign currency. Every record has to be maintained. The government, the central bank, they are also able to know that what is the amount of transaction has taken place with respect to foreign currency, because the whole foreign currency in our country is being channelized through commercial banks, through banks. That means one player is always either the buyer or the seller will be a bank, and other party could be a bank or a customer. That means no transaction. If you talk about the informal market, that is something different, but that is not to be countable. But we are talking about the formal market. In the formal market, we always say that settlement will always, that the buying and selling settlement of foreign currency will always take place in the eyes of the bank only. And as you are aware that banks have opening and closing hour. They open with the sunlight, and by the end of the day, by the evening, these banks hours are shut down or they closes. That means, in another way you can say, a bank open with the sunlight and a bank closes with the down, or when the sunlight is not there, that means by the evening or sunset. And as you are aware that the nature has made in such a way that sun rises in one country, other country will have the sunset. Sunset at one place and sunrise at other place. That means for 24 hours there is daylight in some country as well as sunset in some countries. That means that every hour of the day every hour of the day, some or the other country is having the opening time of their bank. That means you can say that this market operates for 24 into 7 hours. This market is open for 24 hours into 7 days a week. It never sleeps because operation is done through internet, through telecommunication and satellite services. You should have the net access. You should have your laptop or mobile that you can say, and easily you are able to enter into buying and selling of foreign currency in one country or the other country. So that is why we said that foreign exchange market is considered the largest market, because this market is never sleeping. It never sleeps. It is open throughout the day, throughout the week, throughout the month, and throughout the year. Then we should also talk about the currency also. There are many countries in the world, and every country is having their own currency. That means all the different currencies of the various countries, they are eligible for buying and selling if the demand and supply exist. That means if trade is going to happen, then only the demand of a currency is going to take place. But there are, so we can say that currency of any country can be considered as foreign currency if it comes to buying and selling. That means customer has to be there for buying and selling. A bank has to be there for buying and selling, and then only that currency will be called as the foreign currency. But it will be very difficult for a bank if trading is done with respect to all the currencies of all the countries of the world. And this has automatically been restricted, not any compulsion. It has automatically been restricted and controlled because few currencies, they are mostly traded, and they are mostly traded reason being they have the strong economy, as well as the export and import transaction with these countries is more or maximum as compared to other currencies or other countries. Like you can say as USD, American dollar, Japanese yen, UK pound sterling, euro, Malaysian ringgit, Singapore dollar, Australian dollar. These are the mostly tradable, and that is why acceptable currencies throughout the world. That means I am not trying to list or restrict the number of foreign currencies, but here I am trying to say currencies traded. I am not saying foreign currency, I am saying foreign currency traded. So these are the few foreign currency which are being in demand, and they are being in demand due to the trade transaction, or we can say the value of these currencies are strong, and that is why the speculators and investors, they go for investing in these currencies also through a stock exchange. That means they are traded. Like I took the name of Rial or Dinar. If you try to calculate the value of these two currencies, then they are having much more value as compared to USD or pound. But the trade with respect to these countries or these currencies is very less. Like if you try to become an exporter, then obviously you will try to take the payment in your home currency, or else you will try to take the payment in that currency which can easily be sold in the market, easily be sellable in the market. That means you will never try to take the payment in that currency which you have to keep in your pocket and wait for the customer to come so that you are able to sell. This is the layman example which I have given. That is why I said that few currencies are mostly traded and they are only we considered as the foreign currency. Slowly and gradually more other concepts will be made clear to you and you will understand the things. Now another question arises that who are the participants or player in the market? I have already named one as bank, and more better if you call a commercial bank, because I said earlier, if you remember, that commercial bank is having their branches all over the country. That is why, as they are scattered throughout the geographical area of the nation, so they are the best person to deal in foreign currency. So commercial bank become the one player. Customer means you and me, another person. Then regulatory body, that is the central bank, that is the RBI in our country, is the other player. Then brokers in between, exchange broker, they can be other person. And corporates means the companies, and you can also be a company. So in this way we can say that in foreign exchange we are having four major participants: central bank, commercial bank, exchange brokers or intermediaries, and fourthly we can say as corporates or individuals. They are considered as the four major participants in the foreign exchange market. Now the question arises that who are the users of foreign exchange? Like you and me, we are not the users. We are using the home currency. Jemima, she can be a user. That anybody who is trying to cross the national boundary, they can be considered as the user. मारुति के ऊपर दवाई रखी पीछे. They can be considered as the users. So in this way, we try to list out the users of foreign exchange market in three forms: hedgers, speculators, and arbitrageurs. Hedgers means hedge. That means who are trying to deal in foreign currency so that they are able to reduce the risk of decrease in the value of the foreign currency. They are known as hedgers. Hedge, who are trying to deal in foreign currency, to consider them as safeguard so that the impact of risk, or they are able to bring the risk to as zero if possible. Speculators, you understand, They are the various individual and companies and corporations who are daily into buying and selling of foreign currency on behalf of their client or customer. Speculators. And thirdly, I said arbitrators, arbitrage. They are those persons who are dealing in buying and selling of foreign currency without any loss. Without any loss means they are brokers only, but they are very big giant brokers, very active brokers who are aware that what is the value of foreign currency in the market on every second basis. And there are many stock exchanges which are operating throughout the world. So that is why they are so quick, they are so prompt, they are so active that if they are able to find variation in the value of any particular foreign currency in a specific foreign exchange market, means suppose the value of pound in one market is 24 rupees, for example, and other market the value of pound is 23.9 rupees. This information will be encashed by the arbitrator, and what he will do, he will purchase the pound from the market having 23.9 and will sell the same pound immediately to the market at 24. That making a difference, making a gain of 0.01%. That means he is big player. What he will do? He will pull out a huge volume of money in buying 23.9 so that he is able to sell at the higher rate at 24, so that he is able to make profit without loss. Because speculators, when the speculators go for trade, there is a probability, there is a possibility that he may get profit or he may face loss. But here, when there is no chance of loss, there is only profit, it is visible on the net. And this variation exists due to some technical error. And when these arbitrators are able to encash this opportunity, automatically the system recorrect itself, and everywhere the same rate of pound will be seen, because demand and supply is going to change. So in this way, there are three users. One is the hedger, who is trying to deal in buying and selling of foreign currency so that he can overcome or reduce the impact of risk of fluctuation in the foreign exchange. Speculators, it is a business of the person, and the arbitrator who is able to make money without loss, or he makes profit without any loss. Any doubts, students?
So I hope now the basic concept about the features of the foreign exchange has been discussed properly and you must have understood. Thank you.